Hi, I'm Dr. Marc Dussault, and I'm here with the Managing Director of the Australian Bullion Company, Mr. Peter August. And we're sitting here with gold, and this is 105 ounces of gold bars, and this is another ounce of a coin. And I just want to show you what it actually looks like, and it's actually as heavy as it sounds. And just so you can see, this is a regular BlackBerry mobile phone, and we have a series of YouTube videos that explains why you should invest in gold. But what I wanted to do in contrast, and I'm just going to move the phone over here just so you can see the difference in size. And again, this is just a regular, this would be about the size of a 20-cent piece, wouldn't it?
Yes, yes.
Okay, so a 20-cent Australian piece. And it's actually, you know, very attractive because, once again, it's a coin, whereas these are bars, which have a little bit more of a rough texture. But the contrast I want to show you is with silver. Now, this is 1 kilo, which is about, it's about all of this, isn't it? 1
kilo is that.
Is that. So this is that.
It's a dramatic difference, isn't it?
Yeah, it's a huge difference. Now, this is silver, and you have to get a sense for how heavy this is. And when you look at it, it's got that rough texture that we talked about in the other YouTube video about bullion. And it's stamped, and it's actually, when you touch it, it's got a really nice feel to it. But I want to show you another one. Now, this one is, how much? It's 5 kilos.
That's correct.
Now, I'm not going to drop it from too high up, okay? But
just look after my table.
Yeah. Okay. You can, and I do that so you can actually get a sense of how heavy it is. So this is 5 kilos. Now, in today's pricing, we're actually in November in 2009. How much is a kilo?
A kilo
of
today
silver?
is around about $680
So,
a kilo.
So $680 for this.
Just to give you a contrast between price of gold and price of silver.
Yep.
It takes 63 ounces of silver to buy 1 ounce of gold.
So 63 to 1.
That's the ratio, roughly.
Right now.
Right now.
What was the ratio historically?
Historically,
because it's changed, hasn't it?
Absolutely. Absolutely. Now, because silver was used as currency right up until the 1960s or 1970s in some countries, the historic ratio was 15 to 1.
And now it's 63 to 1.
Now it's 63 to 1.
Wow. That's incredible. So here you have silver. Here's the other.
Like silver.
Yeah, I love silver because it's, I mean, it just makes the point, doesn't it? Now, this kind of volume of silver is worth how much?
That kind of volume of silver, what have we got? We've got 12 kilos, so it's, you know, just under 12 times 7, so what's that? It's 8,000, a bit over $8,000.
So this is 8,000. So this is what 8,000 in silver looks like, and how much is 8,000?
8,000 in gold would, well, we can't actually get it here. That's, one of those is 12,500.
Yeah.
So you've got about 6,000 there.
So this would be about 6. So if we had 2 more gold bars like this,
7,000.
so 7,000. Yeah. So this is almost what this is.
Yes.
So that gives you, look at the difference in contrast. Now, we've been talking about gold as a safe haven asset investment for all the reasons that we've already covered.
Sure.
Why would someone looking at investing in bullion, because there's gold and silver bullion,
sure,
why would they invest in silver versus gold?
Okay, well, that's a good question that you ask. And this is my answer to that. Silver has been looked upon as basically an industrial metal, whereas it is also a monetary asset, such as gold.
Yep.
Okay. Now, with silver, you've got a number of dynamics occurring in the marketplace. One of those dynamics is silver is mainly produced as a byproduct of base metal production. So you have mines that
are mining for something
else, for copper, whatever,
and this ends up being part of it as a small percentage. Yeah.
Correct. So when commodity prices go down, that becomes a deterrent for mines to produce those base metals,
yes,
and as a consequence, silver goes down in production.
Now, is that safe to say that, or actually maybe the question should be better phrased, what's the percentage of mining for silver that takes place as the direct mining metal versus as the secondary metal that is...
It's about 25%.
25%. What would it be for gold?
Well, gold, there are specific gold mining companies.
And what would be the percentage?
The byproduct, I don't know specifically what the percentage of gold as a byproduct.
But if you were to guess, it'd be small.
It's small.
It'd be like
very small.
5 or 10%.
Because that ratio of 63 to 1
is so huge.
It's worthwhile.
Correct.
Being able to open up just a gold mine.
Yeah.
Provided you meet all the criteria.
Correct.
Okay. So that's not the case with silver. Other factors that are
I'm going to stop you there.
Okay.
We're going to do another YouTube video on those other factors. So you can just click on this link right over here and get to that video. Thanks for listening.